Welcome to Stock Informer for You. The noise in the market is loud, but we prefer to let the data do the talking. Yes Bank is no longer the distressed, risky stock it was a few years ago. Something fundamental has changed over the last 90 days. With the stock hovering near its 52-week highs around 24 rupees and 80 paise, the market is asking a massive question. Is this the beginning of a multi-year bull run? Or is the stock getting ahead of its actual financial reality? Today, we look past the low absolute share price to break down the hard data, the explosive Q4 earnings, a massive structural shift in ownership, and the crucial boardroom meeting scheduled for June 29th that could change everything. The 90-day Flashpoints and the Japanese anchor. Let's start with why the momentum has shifted so fast over the last 90 days. 3 major catalysts have hit the wire. First, the big corporate action. Yes Bank officially filed a regulatory notice confirming that its board of directors will meet on June 29, 2026. The objective? Evaluating a massive fresh fundraising round through equity and debt to fuel their next leg of credit expansion. Second, the structural backing. Japan's Sumitomo Mitsui Banking Corporation, or SMBC, has firmly established its position as the bank's largest shareholder. This provides a massive layer of global corporate governance and removes the old reconstructed bank stigma. And third, the numbers backed up the hype. In its late April earnings release, Yes Bank reported a staggering 45% year-on-year jump in standalone net profit, booking 1,068 crore rupees for the single quarter. The portfolio re-engineering. But how are they making this money? It comes down to a complete re-engineering of their loan and deposit portfolios. Historically, Yes Bank was heavily dragged down by high-risk, high-ticket corporate loans. Today, look at the balance sheet. The total loan book of 2.73 lakh crore is beautifully diversified. Retail advances make up the largest chunk at 46.1%. Their fastest growing engine is actually the small and medium enterprise and mid-market commercial sector, expanding at nearly 15% year-on-year. On the liability side, they just crossed a historic milestone. Low-cost CASA deposits scaled past the 1 lakh crore mark for the first time, giving them a much cheaper pool of funds to lend out. The financial matrix and asset quality. Now let's look at asset quality, because this is where the real turnaround story lives. Gross NPA has dropped cleanly to 1.30%. Even more impressive, the net NPA has plunged down to just 0.20%. That puts Yes Bank's net stress ratio directly on par with top-tier private sector banking peers. Quarterly loan provisioning costs dropped 41% year-on-year, meaning they no longer have to burn profits to cover old bad debt. Because of this cleanup, the bank officially hit its exit target of a 1.0% return on assets for the quarter. Management's future outlook is crystal clear. They plan to firmly defend this 1% ROE floor in FY27 and unroll a structural roadmap to scale it toward 1.5% by winding down low-yielding rural deposits and growing their high-margin SME loan book by 18%. The valuation warning? But before you rush in, we must look at the valuation realistically. Yes Bank is no longer a cheap, distressed asset. It currently trades at a trailing price-to-earnings multiple of 22.3 times and a price-to-book ratio of 1.53 times. To put that in perspective, it is trading at a premium compared to the broader private banking index average of 14 to 16 times earnings. Why? Because the market is pricing in rapid forward growth. However, remember that due to the 2020 rescue structure, Yes Bank has a massive outstanding equity base of over 3,130 crore shares. This massive share float means the bank needs to produce massive, sustaining absolute net profits to push per-share metrics dynamically higher. The verdict? Yes, Bank has successfully repaired its foundation and is entering a normalized growth phase with elite asset quality. Keep your eyes locked on the June 29th board meeting for the exact pricing and structure of the next capital raise, as that will dictate the near-term momentum. What is your take on Yes Bank at 24 rupees? Are you holding, buying fresh, or waiting for a correction? Let me know in the comments below. Don't forget to hit that like button and subscribe to Stock Informer for You for daily, data-driven Indian market insights. See you in the next video.